So, good morning, Andrés. It's reporting time again. We have for sure a very eventful half year to look back at. But before we jump into the quarter results, can you comment a bit on key milestones and achievements during this quarter?
Absolutely, and good morning, Anna. Thank you for having me here. We've been very busy, as everyone I think knows. We've obviously tried to continue to deliver on our business goals, and the second quarter certainly is evidence of that. We'll touch upon that later. But just as importantly, we've really made significant advancements in strengthening our financial profile, setting the foundation for future sustainable profitability and success. And also, we've started planting seeds and really started moving towards creating a capital-light investment management strategy. In that regard, we've had three major announcements. Number one, we closed the previously announced sale of assets to Cerberus for a final proceeds of approximately over 7 billion SEK, which we're going to use 100% to deleverage. That increased liquidity and deleveraging allowed us to have a better negotiation position to then constructively engage with our creditors, and we are happy to have announced a lockup agreement towards a restructuring of our entire capital structure with the majority of our bondholders and MTN holders. What that allows us to do is to deleverage and to take our capital structure and push it out, allowing us to execute and deliver on our business plan. In addition, what we've done is announced just a few days ago, we announced an investment agreement with Cerberus looking prospectively, looking at future investments where, as we've said previously, what we want to do is increase our investment activity without increasing our proprietary investments, because that entails increasing our debt load. What we're doing here is we're going to invest much more. We're going to originate, analyze, underwrite, and invest much more. But 70% of the capital is going to come from our partner Cerberus, 30% comes from us, which has tremendous benefits for us because it provides us with incremental servicing that we otherwise would not have. It provides us with incremental investment management fees, both upfront, ongoing, and in the future based on profit. And it's the first step towards creating a broad-based investment management platform rather than a proprietary investment platform, which is our fundamental transition, and it has tremendous financial benefits for the platform. So we're very excited with both the asset sale and restructuring as a strengthening of our financial profile, and with the agreement with Cerberus as really starting our path down to becoming an investment manager.
Great, thank you. And then looking at financial key highlights for the quarter, April to June, what would you like to point out? Well,
I think across the board, we've had fantastic results. So overall, revenues, or income as we call them, is up 6%. Year on year, EBIT is up meaningfully, mostly because of acquisitions. But then when we really look at our segments, because we are going through a transition here, we're going to transition from a predominantly proprietary investment to a third-party capital and lowering our proprietary investments. We are also focusing on servicing. So when you look at the segments, you see tremendous positive news. So in servicing, top line is up 10% year on year. EBIT is up almost 23 or 24%. Our margin is up from 16% last year to 19% this year. One of our core objectives is to not only grow the top line of servicing 10% every year from our capital markets day to 2026, which we're ahead of right now, but also to expand our margin. Our margin currently on a trailing 12-month basis is approximately 16%. Our objective is 25% in 2026. We're already in this quarter at 19%, so we made a very significant uptick. On investing side, despite the fact that it's a very difficult environment, we have collected against our active forecast at 102%. That's a very good showing given how difficult the economic environment is. And more importantly, or just as importantly, that 102 represents 116% of what our original underwriting forecast is, which shows that we're doing better than we originally anticipated, but we're also creating an internal discipline of revaluing these assets upwards, such that our active forecast is always the most relevant forecast that we work against. During the quarter, we also invested a little bit under 500 million SEK, but at a much higher IRR, 18% versus 15% a year ago. So when you look at all of this, you see both investing as well as servicing doing very well. On the overall structure of the company, we have realized 0.9 billion out of a target of 1.5 billion of our cost savings. These are very important to make us efficient as an organization and to maintain cost discipline. That 1.5 will be fully realized next year during 2025. And also, from a more anecdotal perspective, not specifically numbers, we've already rolled out Ophelos, which is a very important initiative to inculcate or integrate technology into our collections process. Ophelos is our autonomous AI-based collections platform. We rolled it out in Belgium and Netherlands. I talked about that last quarter. Now we're seeing some initial data, and it's across the board very positive, with basically costs going down about 50% across the board. When you extrapolate that to our entire activity, when we eventually roll it out across all our markets, the impact could be quite dramatic and well above what is in our current plan. And then ultimately, one of the most important things, well, the result of everything I've just said, is that we have delivered. So not only just because of the asset sale, but also because of our efforts on the restructuring, et cetera, we have come down to 3.9 times on our leverage ratio. That is a bit of an artifact in the fact that we just sold assets. We expect that to maintain itself over the next 6 to 12 months at around 3.9 to 4 times. And then ultimately then progress down to the 3.5 by 26, which is our core plan. So across the board, Anna, we have delivered on what we've said. We've said we were going to sell assets. We said we were going to restructure. We said we were going to move towards an investment management. We said we're going to focus on servicing performance and continuing to perform well in PI and investing. And we said we're going to cut costs and delever. So I'm very happy.
And I mean, it's all around clients. Do you have any highlights to talk about when it comes to clients and signings, etc.?
Yeah, the annual contract value over the quarter was over 300 million SEK. That's more than last year, which I think was about 250, 240 million SEK in the equivalent period. Last year was an all-time record in terms of annual contract value. What is very evident is that our services are more in need than ever, that we are continuing to distinguish ourselves as providing the best service in the market across the board. And even though there's been some market turbulence around Intrum, our clients have continued to work with us.
So if you would wrap up key achievements during the first half year maybe, and just look ahead a little bit, how would you comment?
Well, I mean, again, we've been incredibly busy. I'm really looking forward to just focusing on delivering on the business plan as opposed to doing all this transaction activity. But we have to recognize that we've done some amazing things. We have sold assets. We have agreed on the lockup, which still will take effect and be ultimately executed between now and year end. We're starting on their investment management journey. We are delivering for our clients, and our numbers show it in servicing, and we are collecting well against our proprietary assets. So everything is working very well, but ultimately we need to continue to focus on our people. Our employees are critical. We're putting a lot of strain on our people. I'm really looking forward to more focus dedicated purely to delivering on the business plan and developing investment management and developing technology. That's what we need to really focus on to deliver over the long term. These transactions that we talk about are more near-term initiatives to set us up for that success. But we also have to take a step back and not just focus on our employees, but also focus on the people we deliver for and the people with whom we interact. We can never forget, and I've said this many times, our why. Why do we exist? We continue to help individuals who have fallen on difficult times. Roughly speaking, 5 million people in the last year, a little bit under, plus or minus, we help people, about 5 million people every 12 months, to become debt-free, who have fallen on difficult times and have emerged from that and hopefully can now reintegrate into financial society. A very important impact of Intrum on the sustainability of the financial ecosystem. That is critical. What's interesting also, and we continue to measure this, that despite the fact that we're dealing with these individuals in a very sensitive time where they've fallen on difficult times, it's not an easy thing to deal with, they rate us very highly. So 4.3, 4.4 out of 5, which we're very proud of. And we do this while delivering for our clients. We collected over 100 billion SEK last year, 122 billion SEK actually in the last 12 months. That's an all-time high, of which about 14 is for our own book, but the rest is for our clients. And why are we successful, Anna? Why are we successful in collecting a lot while dealing with consumers in a constructive fashion and helping them emerge from what is a difficult situation? Because we fall back on our values. Our values of being ethical, being empathetic, of delivering solutions to consumers. That is what distinguishes Intrum, and that is what ultimately is going to make us successful over the long term.
Perfect ending. Thank you so much, Andrés.
Thank you.